GKFX Prime presents the Market Analysis Webinar.
Hello everybody, welcome to another weekly webinar. Well, in the last week we had just about a record high in the S&P 500 and the Dow Jones, also in Bitcoin. There's the prospect of a double top in both the stock market and cryptocurrencies, and specifically Bitcoin. It's a remote possibility, but it's one I'll discuss in just a minute. The other thing was that the dollar started to weaken a bit at the end of the week, and that helped a little attempted breakout in gold and silver. Silver especially looked kind of interesting, banging into a big area of resistance after a decent run up. I will talk about those all in a minute, but if you have some other charts you want to discuss, please drop a comment in the video. We always like that. Otherwise, click that like button and then more people get to see these videos. Okay, let's start with the euro-dollar currency pair. This is our 4-hour chart. And so if you remember before, we had the down sloping trend line. We've broken higher from that, and we have been steadily moving higher. And then over the last week, we've run into what you can see was the supply zone through here, just about tagged that supply zone about at 116.70. And now we're basically in this rectangle here. We're in a horizontal trading range. This is the third attempt as we record the video of this supply area. The short-term trend is to the upside. And this kind of consolidation is not normally something you associate with a top. It's normally something that you would expect to break higher. So the immediate momentum is higher. This kind of consolidation is typically associated with eventually breaking higher. So I think the odds favor a move to the upside. But I should mention that we're above the 20-day moving average, which is something critical that we look at for just, taking a directional bias on the market. So a lot of things favor the upside here, but the prior move was obviously, you could argue that if we go to the daily chart, going all the way back to May, but even in this last leg since September, the overall trend has been down. So you would expect after a little bounce like this off multi-year lows, at some point sellers are going to try and come in. Now, that looks like that's been attempted a couple of times, but it hasn't really fully panned out from this 116.70. Now, we could get a pop above 117. Now, if you remember from our weekly chart, that's this low here and sort of a potential way of drawing a neckline through this double top pattern here. But if we get above 117, then I suspect we could actually make our way up to challenge this double top neckline again if you draw it in a sloping manner, and that's a bit higher. That's probably over 118.50, and sort of challenging the supply area that characterize these two peaks up here. So short-term momentum to the top side, a lot of reasons to think probably it does move to the upside, but we've got to think that this is still just a small bounce after months of a downtrend. So, what are we doing here? Are we predicting the bottom of that months-long downtrend? That's not always such a good idea. But you've got to recognize what time frame you're trading on. We're trading, changes each week. And at the moment, the momentum's to the top side. And I feel like even despite this long-term downtrend, which we're not necessarily calling a bottom to, still this correction looks like it can move a little bit further to the upside. How would we determine that we're wrong and that actually looks like things are heading lower? Well, there's a pretty clear-cut support here around 116.20, probably the closest round number. If we've got a drop through 116.20, got 116 just below, obviously, then the momentum is the upside momentum is breaking down, and that would suggest that actually this little pop higher, I think we can even draw a trend line through these lows. If this trend line gives way and you get a drop through 116.20, then you can, it would be fair to make the assumption that actually this bounce is not going any further and that we're actually rejoining that longer term downtrend. Right, let's have a look at the British pound. It's been a lot stronger than the euro. We talked about it already in the week ahead. We've talked about it. We've touched on it in these webinars too. That the Bank of England seems set on raising interest rates this year. Now they're doing things a little bit differently from others because they are still doing QE. They're still buying bonds, but they want to do a bit of rate hikes. And then a bit of QE. A lot of central banks want to taper down their bond purchases, then start raising rates later. So it's just that the Bank of England doing things a little bit differently. And obviously from a currency standpoint, you want to hold that currency where interest rates are rising. So we've stalled at 138 for now, but you can see we're getting a little bit of a bounce off this demand area through here. Now what worries me slightly is that this has already worked once, and then we stalled at the high, and now it's working a second time. And it's never, these demand areas, supply areas, never as reliable on the second time. So what we could eventually see is a steeper correction lower, and a bit like the euro, we're going to keep our upside bias. But if this demand area gives way and we break through the rising trend line that's characterized this uptrend, we're going to turn a bit more cautious and maybe expect the longer term downtrend to come into play. Now, this declining trend line through these peaks would suggest there's a little bit more upside to be had here. Maybe at testing 139 again would be these highs through here and this declining trend line. Yeah, maybe we just don't get that high and we break the trend line down from here. We've got to be open to both ideas. So same thing with the euro, but the pound's uptrend's been going a bit longer. It seems like we're going to assume that the uptrend's still in place. We're still above the 20-day moving average. But if this near-term support gives way and the trend line gives way, then we're going to turn a bit more bearish. Here's dollar yen. It's been the strongest currency pair of them all. It looks a bit messy at the moment because I've added this Fibonacci on there. Just the way that I've drawn it when the trend really started to accelerate rather than from the bottom down here. I sometimes do that just because it's good to find a level that's already worked. So you could say that right now we're hitting this 38.2. The market's already reacting to that as a Fibonacci level, among other factors. So then if we got a drop down to the 50, it coincides quite well with these lows through here in this little spike test of 113. So this seems like it would be a good area for the market to test before eventually rebounding. And if this gives way, we've got the 61.8 and the 20-day moving average. Is it the 20? Yep. So a few layers of support below the current price, which could offer opportunities. And then I think you just say if below the 20-day moving average, below the 61.8 Fibonacci, then you start thinking of other things than trying to buy a dip in this uptrend. Maybe you start looking for range trading or downtrend opportunities. Remind ourselves of the big picture here in dollar yen and why this downside could continue a bit further, because we have hit a major resistance here. This 115 basically has been resistance going back to 2016. So we're basically talking about in the news it's been saying 4-year highs, but it's close to 5-year highs in dollar yen, 5-year lows in the Japanese yen. So that's pretty significant, obviously. You would imagine that we've already had one down week from here. But given how major this resistance is, it wouldn't be surprising to see maybe another down week. A little bit of consolidation before, if we are to break to the upside, some consolidation first would make sense. So that's the picture there. That's that second resistance that we broke down. So, I've talked about the 20-day. Obviously there's always extra support further below. That would be one as well, just that level above 112. So just a reminder, we could go from this major resistance down to this, which was resistance, tested as support, then bounce. So we've got those Fibo levels, we've got the former resistance, and which could act as potential support. But given this momentum for now, we probably want to be looking for upside opportunities in dollar yen, but we're just aware that we've hit some major resistance. So this is gold. I mentioned there was a bit of an attempted breakout last week. So we did push up to the highest, what was that, a couple of weeks, I think, since the 7th of September. So, actually, okay. So, yeah, that's the highest in almost 6 weeks for gold. But then we did get a big reversal off the highs. The dollar got a bit of a bid at the end of the week. That was attributed to news from Fed Chair Powell, who basically conceded that yes, tapering does need to happen this year. They've not completely certified that it will, the Fed, but this was Powell saying yes, it's too early for a rate hike, but actually it is time for tapering. That was basically I'm rewording it slightly, but it was along those lines. And so that tapering, means less dollar money printing, and so obviously that's good for the strength in the dollar. And so gold, which is priced in dollars, came down a bit. Worth noting the RSI, that the 60 level in RSI on this daily chart has been a significant resistance for gold going back to July. So if we can actually get above that, then that could be a decent turning point, and it does quite neatly coincide with this downsloping trend line. So obviously that was the resistance that we're facing alongside the 200-day moving average. That's this red one sloping through here. So we've got the downsloping trend line, the 60 of the RSI, and the 200-day moving average. So you can see why gold is struggling a little bit at this area, right? It's had one sell-off, but it didn't make it down to the lows. It put in a higher low, and now it's made up through, and it's had a bit of a sell-off, but it's attempting it again at the start of the week. To me, it looks like chances are we get a bit more upside here in gold, and that doesn't necessarily mean too much, although I think it does mean more than on previous occasions, given the 60 level. If we can get above there into overbought territory again, that would be interesting. But we do have that 1830 major resistance not far above. So it's still inside a trading range, but it's broken above a few key internal resistances, which could increase the chance that we actually get above 1830 as well. So it's still choppy in gold, but it's just turning a few factors looking a bit more positive. We're at resistance, so if we see a big bearish day, then just flip all those. I'm talking about a big resistance. If we break above it, that's significant. If we don't, if we roll over from it again, then that's bearish. This is our line in the sand, basically. These areas of resistance I'm talking about. On the price chart, it's about 1790. And then on RSI it's 60. Silver's looked a bit more interesting, as I said. It's got its own equivalent downsloping trend line, but broke it a bit earlier than gold did, and has now tested these highs. And so there's been a bit of a reversal from the highs, as you'll often see. It's a shooting star candlestick. We haven't had enough to put in an evening star. If Monday's candle closes lower, then that would actually be a bearish technical signal at an old resistance. That would be quite a decent bearish signal. But for the time being, we're above the I believe what we got here, the 50-day, the 50-day moving average, and we're broken above the downsloping trend line. We're just pulling it back a bit from 25, which is obviously a big round number. So it looks probably like a sort of time when you don't want to be buying at the peak, but it does look overall like silver's turned a bit more positive here. If we pull down to the 4-hourly chart, you can see that bearish engulfing candlestick here from the resistance that we pointed out. It looks like the pin bar on the daily chart. Then on 4-hour chart, you've got a kind of bearish signal from this bearish engulfing. It's moved up into this. There's probably a decent chart that it rolls over a bit further. And then we've got our, resistance and then support down here on the 4-hour chart if it gets that far. So you've got 24 is the immediate support if we get a bit deeper here, and then down to the same support and resistance again, which is about it's about 2350. So always difficult to buy at the highs. if you're feeling a bit aggressive, you could actually sell at the highs or wait for an opportunity to rejoin this upward movement a bit lower. Moving on to the oil market, still, we said last week that we've got to stay positive on this market. It's such a clear uptrend. I've drawn this uptrend line on the price chart, which I think covers, I think that defines pretty well the trend that we're dealing with. And then most recently, 81 has been a very clear level of support. You can see that was the peak, and then it's been the source of several lows. So while we're above 81, still pretty good for oil on the short term. A move through 81, I think we probably get a deeper pullback. And if that move through 81 coincided with a break through this rising RSI trend line, which connects most of these recent lows, that would also be a bit of a bearish sign. Just a sign that there's going to be a deeper pullback, and after such a run up, it could be something in the order of a 38 or a 50% pullback. And I mentioned I think this was even the case last week. How many days are we going back? 1, 2, 3, 4, 5. Well, I think we were a bit lower last week. We were talking about the breakthrough, the declining trend line. I said we were going to probably most likely going up to test the old highs, and that's what's happened. And now, it's a long-term uptrend in the stock market. We've had a 5% correction, and now we've rallied back up to the highs again. So there's a pretty good chance that we just continue on higher with the uptrend, having already completed the correction. But the risk to reward ratio on on trying to predict a top in the market, given that we are just currently at the old highs, is good, right? Yeah, that's the chance of it actually being a working trade is quite low, but the risk to reward is good because you're at the high, and even if you sell it down to the recent lows versus the risk you'd be taking near the highs, that's quite low. Just selling it arbitrarily at 4,550 is one way to go, but probably a more conclusive way to go about it would be to wait for some more supportive price action. So say, for example, if we had a break to the upside where we got as high as perhaps 4,600, which is a round number, we were breaking high, and then we had a big reversal back under the old high. The market rallied 50 points, but then it dropped 100 points, something like that. We'd obviously be at lower prices, but it would be a false breakout, and you'd be a bit more confident about trading down to weaker prices. And then the chart looks different, but actually it's a similar setup in Bitcoin, which is challenging its highs since March. In the case of the S&P 500, it's challenging its highs from September, obviously a lot more recent. It's taken Bitcoin a lot longer to get back here, but nonetheless, that's what's going on. We made it to record highs, just shy of 67,000, and then we've dropped back through these old peaks, and you can sort of see it was these levels. I haven't drawn it so well there. It was sort of these. This is was the major resistance, right? And we got a break, and then just a gap down through it. So that was kind of the major level, and actually that's what we're testing right now. So I think while we hold above, what level is that? That's 59,400, you could say. It's 59,500 maybe, in that vicinity. That's kind of the it was resistance. Now it's support, and if the support gives way, then I think we see this deeper correction in Bitcoin. For right now, though, it looks good. I mean, record highs are a bullish thing, and we've had a pullback, so this is not a bad setup for bulls. But just be aware of this kind of, I would say, small risk, but potentially interesting opportunity that it's actually a double top. All right, I'm going to call it a day there. Thank you very much, everyone. Thanks for tuning in, and make sure to subscribe to the channel so you don't miss the next week's video when it comes out. Thank you.